the Jobs Act substantially and foundationally changed the regulations around private alternatives, right? Before then, if you were going to invest in a private alternative, you could only invest in something if you had a prior relationship with the offering sponsor and a substantial relationship. I mean, you couldn't have just, met them at a coffee shop for 5 minutes and that counted. It had to be substantial. They had to understand your financial situation. And so the reality is private alternatives, private equity, private real estate, these hedge funds, all these different kinds of alternatives have been around for a very long time. This is not a new thing that's happening, but what's changed is the access, and it's fundamentally changed because what's now happened since 2012 is the regulations that will allow sponsors like Aspen funds, like us, to go and directly market to accredited investors, right? So that's what I think was really a monumental shift. At the same time, the market was kind of feeling, the existential question of there got to be something else other than what I'm doing.
Yeah. And
then, we've done a ton of research. It sounds like you have as well, on what the ultra wealthy investors are doing. It's the whole foundation of our podcast called Invest Like a Billionaire. It's invest like the ultra wealthy, and what they're doing and have been doing for many decades is investing large allocations into private alternatives, and large to the tune of 50 to 60%. If you look at the averages of the foundations, the endowments, the kind of family offices, if you're looking at their average allocations, generally they're at least 50% into privates. And it's totally different than the retail. The retail investor is maybe your 5% in alternative investments.
Yeah.
And so that's where I really think this early innings, and that only happened in 2012. So that was 13 years ago when we're having this conversation. And it's definitely seen a big shift towards private markets, but it still feels very early innings to me.
It's no surprise that big time fund managers like Ben are seeing the exact same things that I'm seeing. Success leaves clues. If you want to grow your wealth, mirror the strategies of the top 0.1%.